Merry Christmas, folks. Only joking. Assalamu alaikum. So recently, I went through the top 5 investment banks 2023 outlook. And let me tell you, what I found was pretty shocking. It was a bit of a bloodbath. But where there is a bloodbath, as my grandmother once taught me, she was an immigrant from India to Pakistan. Where there is a bloodbath, there is money to be made. And in this recession, in 2023, there will be money made. And in this video, I'm going to share with you what these investment banks said, what I've taken away from that, and what my investment game plan is to make some money in 2023. Let's go. Look, 2023 is a massive, massive year, and I cannot stress that enough. Even if you're not an investor, you hate money, not interested in it, just for this 1 year, folks, just concentrate on investment and money, because this is that one pivotal year that will then dictate how the rest of this decade plays out for your finances. Let me explain. This is the first year where we've had concurrently stock market collapses, inflation going through the roof, countries going into recession. We've had wars break out, supply side inflation. China is closing itself off. We've had a rise in tensions politically between the West and the East. All of this is happening at one time. And what that means is that whenever you have the shift in the tectonic plates, whenever you have that change happening, if you can spot where the tide is heading, then you can really take advantage of that. As BlackRock said, we are going to need a new investment playbook for this decade. But before we begin, let me share with you your destiny, brothers and sisters. Your destiny from the moment you woke up this morning was to click on that subscribe button. But no, seriously guys, your support really helps us on this. Obviously we do these videos for free, but it does cost money to do all of this stuff. So please do help us grow and continue doing this by subscribing and sharing it with friends and family. Okay folks, so what's going to be the opening move that we're going to make? Well look, investing is really actually quite simple. Invest in the growing areas and avoid the declining areas. And in the naughty corner we have tech stocks. We have Tesla. At one point in the last year and a half, it was trading at 190x its earnings. Isn't that bonkers? Why were you buying that, folks? Then we've got Amazon at 45 times its earnings. And the Nasdaq as a whole was at 40 times overall earnings. And obviously, now the tide is going out. A number of people have been caught and we found out they had no clothes on while swimming. And we're going through a massive tech correction. The other asset class in the naughty corner right now is big private equity. Now, small private equity, different matter. Big private equity, like Blackstone, Carlyle, KKR, all of these guys are effectively not marking down too much their companies. Whilst the entire world in the public markets has collapsed, for some reason, the private markets, they're not marking them down at all. That seems a little bit suspicious. And looking forward with interest rates a lot higher and private equity is all about leveraging everything up and then using that to make the returns. With interest rates higher, that's not going to be a strategy that's going to work half as well. And so that is also on the naughty step. Late stage venture capital. So this is large companies like Klarna and others who have recently raised in the last few months have seen massive down rounds, i.e. they're raising at a valuation where previously they had raised far above that. This is happening because there was a lot of price inflation throughout the last 2-3 years, and this is now correcting. And finally, we have the United Kingdom and the European Union, both of whom are on the naughty corner. You stay right there, United Kingdom. I told you not to leave the EU. Did you listen to me? No, you didn't listen to me, and look what's happened now. Are you ashamed of yourself? You should be ashamed of yourself. No, I'm not going to practice unconditional parenting on you. You don't deserve it. And you, European Union, you're just European and you're going to go into a recession as well. Both of you, extremely naughty behavior. You literally look at yourself. Look at the Middle East as well. I mean, you do look at the Middle East. You were commenting on the Middle East. Look at them economically as well. Thank you very much. So folks, none of those places are an acceptable receptacle of your money. Do not put it there. And in the growth corner, on the other hand, we have, firstly, decarbonization. Ladies and gentlemen, if you haven't seen around you, we are going through a climate crisis. Our planet is heating up, and in order for us to stay below 1.5 degrees of additional heating, which is still pretty bad, we need to be reducing our carbon from the atmosphere at a rate of 10 to 20 gigatons every single year, consistently for the next 100 years. And even at that point, it's still going to be a much worse place than we are living in today. So this is a graph of the UK house prices and the changes that we have seen. And as you can see, folks, it's looking pretty bleak, and there are a lot of similarities between now and 2007 to 2009 during the first two quarters of 2023. And in my personal view, I think there's going to be further falls in prices during the first 2 quarters of 2023. And the reason for that is really simple, because as interest rates have gone up, all of those guys and girls who had been leveraging and using the debt financing to buy houses, a lot of them have found, actually, folks, we don't really have the money to cover this. And so they're going to increasingly go bankrupt, or they're going to have to sell their homes. So people are going to sell homes, or they're going to sell their buy-to-lets. And that's going to cause the house prices to go down even further. So there's going to be some absolute bargains to be picked up in the UK residential sector and anywhere globally where debt finance has pumped up that residential market. Small private equity, unlike the big private equity, small private equity has already gone down in price quite considerably. And so you can pick up a newsagent, pharmacy, dentist, GP practice, all of these kind of very robust, solid, sensible businesses for much cheaper than they were before. And if you can buy them up now, and there's a very interesting opportunity where you consolidate the various different purchases that you've made, and as the market recovers over the next 3 to 5 years, you could find that you're sitting on a little bit of a gold mine. Or you could just be sat on a GP. But either way, should be all right. Early stage venture capital. This is not as inflated or overpriced as late stage VC had become. This has always been a growth area in my view, because technology and science are the heartbeats of our progress as a human race. And early stage venture capital is at the heart of that. So the heart of the heart. Naturally, you want to be at the heart of the heart, right? Fixed income and credit. Look, as interest rates have gone up, a number of these bonds and fixed income investments have become very profitable. Of course, this isn't halal, but more on that later. Macro trading, swing trading, and value investing. The people who won in 2022 were those who were investing in macro trading, swing trading, and value investing. This kind of stock market investment style is having a bit of a moment, and that is going to only continue in 2023, where we're going to continue to see a lot of volatility in the market. We're going to continue to see a drawback and recessions, and we're going to continue to see a lot more cheaper companies on offer. And if you don't know what any of those terms mean, then let me know in the comments below, and I will do a video on swing trading, macro trading, and value investing as well. So ladies and gentlemen, that is the list of ingredients that we should be picking from in order to bake our profitable HMC certified halal apple pie of 2023, coming to you at your local halal food festival. Look, folks, everyone will have a unique, different situation. My particular situation is I have a lot of long-term illiquid investments. And so what I want to do this year is focus a lot more on shorter and medium-term income-generating investments. The good news is that this is the year that is perfect for that kind of investment. I am going to build my investment portfolio around 3 investment theses that I have high conviction on and that are corroborated by everything that we have heard from the big 5 investment banks as well. Number 1, property and property-backed investments are going to continue to do well over the next decade in a high inflation environment that we are in. And secondly, if they are picked up at the right, aka cheap prices. Number 2, there is a massive aggregation play to be made when it comes to small private equity, i.e. buying up lots of businesses and consolidating them together. In particular, I'm very interested in this trend of the NHS privatizing quietly, because right now, you may or may not know it, but the NHS is privatizing. There are so many businesses that actually run various different contracts and units across the health service today, and that is only going to increase over the coming years and over the coming decades. So this is the opportunity when prices are low and the NHS is actively looking to privatize, to get in and take advantage of that through small-scale private equity. Principle 3, decarbonization. This is the problem of our time. We've all watched those films where the world is coming to an end. We are actually in that scenario today, folks, because of the increased amount of carbon dioxide in our atmosphere. So we need to solve this, and I feel like people people are not fully switched on to how big of a problem this actually is. So for example, let me give you an easy example to explain this. When I say, oh, we should be going green, we should be, decarbonizing, what's the first thing that you think about? Plant a tree. But that's the problem, you see. It's not actually planting a tree. There's a lot more science behind this. And planting a tree is actually not going to be a permanent removal of our carbon stores from the atmosphere. We actually need to be doing permanent carbon removal, for which we need to really invest in science and technology. And also, the other thing, Kabzi, you said to me off stage, which is fossil fuels. We need to be getting rid of those as well and switching over to renewable energy. And that's going to take a lot of investment. People haven't clocked just how much of a catastrophe we are walking into in the next 20 years if we don't act now. And so that means for people like me and you, if we are investing in those technologies and those startups and businesses that are fixing the problem, that's liquid gold. Okay folks, so we've got these core theses. We like property, we like small scale private equity, we like decarbonization. How does that manifest now practically in my investment? Let's go. I probably have around £50,000 to play with after I steal some money from my wife and get Mohsin to sign a white paper that he doesn't know what it is all about. Anyway, I've got £50,000. What do I do with it? So, in line with my property-backed theme, I would like to invest probably around 20,000 of that money into property. And ideally, I want it to be property development. So it's going to give me a bit of a higher return, ideally 15 to 20% per annum. So this year, I'm going to do probably one of two things. I've not decided what yet. One, I could buy myself a small private equity with one of my family members. We could do it up and then we could sell it on. That's option one. Option two is I could invest in a property development fund that I know and I'm very excited about and is launching in Q2 of 2023 on the Curate Capital platform, which will give me roughly the same results. So I've not decided which of those two I'm going to go for yet, but that's where £20,000 of my money is going to be going. The second investment I plan to inshallah make is to invest in the Curate Capital fixed income fund, which is going to give a return of somewhere in the region of 4.5 to 5.5, possibly 6% per annum. This is going to be backed by property, and I really like the idea behind this fixed income fund, by the way, because you're investing in Sharia compliant, truly Sharia compliant home finance, which is something that, as you all know, is very difficult to get hold of at the best of times in the UK as a Muslim. But more importantly, this is the place where I'm thinking of parking 10k, because it's the let me just park it here until I figure out what I'm going to do with it now money. And I might well take that £10,000 out and do something else with it if the opportunity arises. But yeah, 10k is going to go into this area. The third main investment I will be making is small private equity, and I'll be putting in around £10,000 into this, and I will be exclusively doing that via Curate Capital. And the reason for that is simple, because you need to club together with other people when you're playing in the small private equity space in order for you to be able to buy anything. And certainly if your whole strategy is around building lots of small little things and combining them together and aggregating and getting the economies of scale, you're just not going to be able to do that with £10,000, right? So that's why you need to club together with others. And Curate Capital, I know, because I run the thing, I know that they're going to be working on this investment strategy, particularly excited about anything to do with the NHS and healthcare. Finally, when it comes to decarbonization, I don't have any firm plans about making investments in this space, because I already have a lot of venture capital, i.e. long-term investments in the carbon removal space already. But if something really cool was to come up, then I could get tempted, firstly. And secondly, if something cool came up that was giving me a fixed return and was helping create renewable electricity, for example, that would be something that I'm very interested in, because it fits into my income generation goal for the year. So in summary, my portfolio allocation for this year looks something like this. You've got property development, which is about 40%, then you've got fixed income, which is about 40%, and then you've got private equity, which is going to be about 20%. And then maybe something to do with decarbonization could take up 10 to 20% if the right opportunity came along. Do you guys agree with my allocation? If you do, let me know by liking this video and then subscribing to the channel. If you don't like this video, then let me know by subscribing to this channel regardless, and then commenting below with something trolly. More than happy to take you on. Right, so now I've shared with you my investment plan. Does that just mean that you should copy it and do it yourself? Absolutely not. Use your noggin, my friend. Look at what available opportunities that you have. If you're based in Timbuktu, you're not going to have the same investment opportunities that I have right here. And I probably won't have the same investment opportunities that you have. So that's the first thing. Second thing, look at your investment goals, where you are in your time of life, etc., etc. All of that should play into your decision. So how should you practically approach it once you've taken into account all of those other considerations? Well, number one, you should look at those growth sectors that I outlined either in this video or in a previous video. I've outlined some other growth sectors as well, and decide which one of those you're particularly excited about. Next, you should look at your existing portfolio and see what are your goals around that, both short term, medium and long term, and what needs to be adjusted within that as well. And then finally, you should look at the universe of investments available to you and see, okay, what fits with what I need to put into my portfolio today, and then you can go ahead and due diligence those things and off you go. I'd love to hear from you folks on what your investment portfolios and strategies are going to be for 2023. If you comment below with your portfolio allocations for 2023, I promise I'll go in and I'll comment on what I think about that allocation. Until next time, Assalamu alaikum.